Okay, welcome everybody to the Bootleg Weekly, another episode here, live with Roy. We have a lot to talk about. We have quite a bit happening in the market right now. But first, how are you?
Tired. It's felt like December has just flown by, not just from the market standpoint, but personally as well. It's been a busy month. But this is one of the highlights of the week, and I'm glad to be here. How are you?
Man, living my best life. I got a new laptop. I have been tweaking a lot of things now that I can without nuking my entire computer. And I feel like I've been living under a rock because I hadn't upgraded my system in like 4 years, and now I'm like, wow, this is what the world looks like in color.
Yeah, my computer's like 7 years old, 7 or 8 years old. I used to have a computer parts business, and so I'd have like the newest, not necessarily newest. Like I'd usually get like a 1 year old machine,
Yeah,
upgrade every so often. And since I've not been active in that for a while, it's like, well, just with this computer, which was like top of the line 7 years ago. Now, if I do StreamYard and Robinhood Legend at the same time, like it just freaks out. And I'm like, come on,
yeah.
man. And it might be a Linux thing. I've had issues with Windows, so I'm now a Linux nerd. But
Oh, dude, I was pushing this thing to the limit um, the other day. I had my video editing because I have like four screens. I had my video editing just for like as an experiment. I had video editing software, Weeble. I had a movie playing, and I was also playing Total War on Steam at the same time,
nice.
and it was just everything was running fine. I was like, "What the heck is this?" With like
Which Total War?
Three Kingdoms.
Okay, yeah, I've heard of that one. I've not played it. Yeah, I hadn't had time for computer games in like 2 years, but I love Total War series. That's great.
Dude,
So,
I grew up on Rome Total War,
mhm.
and so like that'll always hold a special place in my heart. Rome 2, Shogun as well was really
I
good.
love
I
Shogun.
I
Yeah,
feel like Three Kingdoms though has the most in depth um, diplomacy system where you have all these factions and you can do trade specific stuff with these it's really intricate. um it almost reminds me of Europa Universalis. I don't know if you've ever played that one. It's like
yeah. It's been a while, but yeah.
that game is like serious nerd stuff, but there is no real comparison to Total War, right? Because you have the in battle stuff as well.
Oh
So
yeah. Yeah, I actually really liked. I didn't think I'd like it, but the Warhammer series too. I thought that was really fun, but I know that wasn't everybody's favorite. It's a little bit different genre. Um,
well,
they're all good.
I was gonna actually download that because um like I didn't have my Steam opened in quite a long time because of my computer, and I just opened it, to run a test over the weekend, uh, whether this thing would crash or not. And so I just downloaded Three Kingdoms because I already had it purchased on Steam, and I thought about buying the Warhammer game because it's number one, highly reviewed, number
Yeah,
two, their most recent release, and number three, it's on discount on the Steam
yeah.
store. So I've never played it, but I might play it. Actually, while we're on that segue, and just also while other people just start to roll in, one of the games that I've been really wanting to play, Roy. I don't know if you're a PC or a Mac guy.
PC.
Okay, then you're in luck. Um, is called Manor Lords. It is honestly, just go watch gameplay footage of it on YouTube. It is like, I want to play it so badly because again, it just allows you so much customization around what you can do
Yeah,
with it. But I can't. There's no Mac version, and so I was thinking of downloading this thing, which is like you create a Windows instance in your Mac, and then I can run it there. So I'm experimenting with it, but again, just like nothing
yeah.
super serious.
No,
But yeah, check it out.
I've loved. I love playing games of all types, like in
Yeah,
person games, board games, computer games, like just making up games.
yeah,
Love that sort of thing. But yeah, right now, like it's a season of like board games with family, and I love that. So nothing wrong
yeah.
with that. But like with the dissertation stuff, it's in the market stuff. It's like, yeah, I got to cut games out. But for you, you're replacing degenerate gambling on options and also on sports with computer games, maybe. So maybe that's a
I
healthy upgrade.
I am definitely not. I was
Okay.
at a craps table last night, which was really
Oh,
fun. We went with friends, but yeah, it's I'm not replacing gambling with anything, honestly.
all
Um,
right.
but options trading is a nice like tide over, I guess, so I can feel good about when I lose a couple $100. I'll be like, yeah, well, I made that an option, so I'm good
Yeah,
for the week. You know,
there you go.
but if anything, it enables the gambling.
Speaking of going, oh,
Mm.
let me pull up that link here. So this is entitled, and I've seen this a couple of places, not just here. This is a holding that you have,
Yeah.
and it is entitled "Long Live the Batman." And so it seems like we went from Fang to the Magnificent Seven, and then Jim Cramer wanted to rebrand it Magnificent Six and kick Tesla out. I don't think he probably wants to kick it out anymore. We will talk Tesla, by the way.
We didn't so sorry, right, we didn't go straight from Fang to Magnificent Seven. There was a period in between where we were referring to them as the MAGA stocks,
Okay, yeah,
Microsoft, Apple, Google, Amazon.
yeah,
Just saying, because Netflix fell out of favor right around the time when Bill Ackman sold, when, all of this stuff was coming out around Netflix and the password sharing crackdown and all that, and everybody was like, "Uh-oh, Netflix is kicked out of Fang now." So,
yeah.
and then there was a period where it was called Fat Man because of Tesla, and now we have Batman. So what's the B?
The B is, well, you'll see here. It's Broadcom, even though it's AVGO.
Yeah.
The company actually starts with Broadcom. You own this one, right, Tevis?
Yeah, I do own this one.
And
Um,
and of course, it's in the right sector, which doesn't guarantee anything. We talked about AMD last week, and it's an interesting play. I don't know if I think I'd probably just rather be in Nvidia if I was choosing these two, but AVGO, Broadcom, like is just on a tear. It's past the 1 trillion
mhm.
market cap, and so Batman is right there. Broadcom, Apple, Tesla, Microsoft, Meta, Amazon, Alphabet, Nvidia. Probably like next year they'll add like a ninth name to it, and it'll be something crazy, and eventually it'll be like elephantitis or something like that. So, what do you think about this acronym? What do you think about AVGO? Do you
I
think
mean,
this is warranted? It's just speculative. Are you holding? Are you buying more?
it doesn't really fit the acronym. The only reason why the ticker is a do you know why the ticker is AVGO?
I have no idea.
It's because in 2015, Broadcom purchased a company called Avago, and that was like their ticker, essentially AVGO. And then they merged the two companies, and so that became the ticker. Um, yeah, it would be like Avago Tech.
Avago.
So
Okay, I've always heard of AVGO. So, yeah, shows what I know. No, I've seen
um,
Broadcom around forever, and of course, being a former computer parts company, like we had a lot of Broadcom products, but
yeah.
yeah, 125% year to date return. Are you selling? Are you adding more? Are you just content?
So okay, this was a stock that I bought as a dividend in my dividend portfolio. And it's definitely not dividend. It pays a dividend and it's great and I love it, but the returns are not what you would expect from a dividend player because this is a perfect year for anybody in the like semi space, as we saw with Nvidia's rally. Nvidia had a falling out of grace somewhat recently. I did pick up more. I started a position in Nvidia, but it's in my portfolio where I'm just writing against it. So I did covered calls for 143 last week, and I sold out of those at a pretty hefty profit. Um, I did lose quite a bit of my Broadcom. The majority of my Broadcom, actually, I lost it to covered calls, which is fine. I still own a small position, and I'll probably get that called away um, anytime soon. So I'm not like it's not like a long term thing that I'm holding. It's done tremendously. Thankfully, I wasn't writing covered calls the week that it jumped up 20 something percent. I did write cash secured puts, and that was my trade for last week. And we talked about it on the last
Oh,
bootleg. I said, hey, look, I've been looking at this company for a year. I think people are not pricing in earnings. It's had like it's retested that all time high. It's had a double top, and I think that it could be primed for a big blow. And I wrote covered calls at 175 when I was trading for 179 2 days before earnings, and made $1,000 on that. but I've made way more with shares. I will get those shares called away. I mean, I'm not being careful with them. I'm writing pretty aggressively on them. So yeah, it's not like a long term thing. I do believe in the company long term. It's in the portfolio where I'm just writing, and I have pretty clear goals on what I'm trying to get.
So you want to do a Palantir on it then? That's just
Yeah.
get out of it before it really runs.
I mean, yes, exactly, but not exactly because it's not a small company by any stretch of the imagination. It's
Yeah.
1.1 trillion.
Yeah. So as far as a space, is
Mm.
this your only chip company? Do you own any like Intel, Nvidia, or
Well, yeah,
AMD?
so like I said, I started a position in NVIDIA very recently, like last week or 2 weeks ago. And yeah, I'm probably gonna let that get called away at some point or another. But I do think that like Nvidia right now is not uh, carrying the same premium as it was over the summer when that euphoria was at highs for Nvidia. They've still been putting up great results. Of course, we can expect a slowdown because like you can't keep up those numbers forever. I think that the market though is trying to decide right now whether Nvidia is still their horse or whether they're diversifying. I see a lot of attention on AMD
Oh yeah.
recently. Like, I mean, look, AMD, um,
I get asked about it like every day, and I'm like,
and I
I think
understand
Nvidia
why.
is probably better. I get why though. Like it is interesting.
Well,
While you talk a little bit about it, let me pull something up.
mhm. I think there's a couple of things for renewed hype for AMD. One of them is the fact that this thing is like has the lowest it's been in a year. Um, so that's like people are thinking, okay, I can find value in this space. I get that. At the same time, Jeremy is starting a big position in AMD, and he has quite a big following, and people are following him, or at least leveraging him as an indicator to start researching AMD. I think it really depends on your goals. Like, can you buy AMD as a trade? Yes, absolutely. But then you have to look at these technical indicators, and you could make an argument. Like, I'm just looking at the chart right now. Let me throw it up. I think you can just make an argument that this is. Let me see if I can throw this up. I think you can definitely make an argument that this is a double bottom. Hold on.
Yeah,
Let
I've
me
been
let me
eyeing it.
start real quick. I'll
Yeah,
be
I
right back.
have a few stocks that I swing. One I'm probably going to get out of because it's run up a little bit. That's GameStop. I've held it for like two or 3 weeks. I'm on my own. Sweet. But I'm always swinging something, and if it's not Bitcoin miners, it's stocks like GameStop or Cooler. A few weeks ago, not a few weeks ago, like a month ago or so, KULR. And AMD, I'm eyeing. Like it's interesting. It looks like it's probably bottomed. I think it's oversold. I just don't know that if I want to own it long term. And when I enter, I think it's really important for anybody that's considering going into AMD or something else. Know why you're going into it. You can change your mind, but you shouldn't do it just based on the stock movement. So oftentimes, retail, and that's us included, we look at a position where like, oh, AMD, it'll make a great swing. I'm going to go in, and then let's say next quarter, and this may not happen, but let's say they miss terribly. They have terrible guidance. The stock goes down 25%. The tendency of retail at that point is to say, oh, well, I might as well just be long now. I'm already down some money. It's sunk cost fallacy, honestly. And so it's better to go in and understand and think of it in like, okay, this is a trade. And if so, know your goals. Like, okay, if it, goes up 40%, I'm out, or, 10% in a week or something like that, or if you have a certain price goal, or Even better is probably a timed goal on a trade. Otherwise, you can get stuck, and it may take 3 years to go up 40%. That may not be worth your time in the current market. 1 year is great though. So yeah, just kind of know why you're going in, and if situation changes, don't let price be the reason. Like if you are in, as an example for Robinhood, over a year ago, I was in Robinhood heavily with leaps only, options only, pure cyclical play. I would be out by January. That company forced me to change my mind, and it's not because I got stuck in it or anything like that. It's done quite the opposite. So I think you're
Yeah,
muted.
yeah, I would agree with that. I mean, what's cheap can always get cheaper. I was just gonna throw this up. And by the way, did you see how fast I came back after that restart? I love this computer, man. So, like AMD, like you could just draw a straight line here at the bottom, and then you could say, okay, well, that definitely looks like it's gonna retest that line. But at the same time, like I don't even really love it from
Yeah, I don't like that. Honestly,
like
there's no
that chart
volume shelf either.
perspective.
Yeah.
No volume shelf, and it's always just making like lower highs, which like I don't think this thing has found. And anyways, like this is what I'm saying. It really depends on your goals because if you're looking at this as, oh, I am long term bullish on this company because I believe in the prospects of it, and I believe what management is doing and new product lines and the growth and whatnot. Like, and I want to hold it for 5 years plus. Great, yeah, buy it in. Who cares? At this price. Like if you buy it at 125 versus, 105, it's not going to make a huge deal at the end of the day. Like if you're holding it for 5 years or 10 years. But if you're buying it as a trade, then yeah, I do think you got to be really careful because you want at least some short term indicators to help you make that decision. As we've said multiple times before, you choose what stocks to buy based on fundamentals, but you use technicals to determine when to buy them. And I'm not a technical trader by any stretch of the imagination. I just don't. I don't even know about AMD's fundamentals, so that's why I'm resorting to the technicals. Um, so I don't know.
Yeah, it's tough. I based on that chart and the lack of the volume shelf, I wouldn't get in. But I'm I'm
Mhm.
I'm an okay trader. I think I'm a really good long term investor, and I did find quality companies. AMD
Yeah,
is quality as far as leadership, as far as product. I have questions on their mode.
Lisa Su, person of the year.
What's that?
Le- Lisa Su, person of the year.
Oh yeah, yeah. Lisa Sue. We talked about her last time. Like, I don't know how we got back into AMD. Like, but it's
Yeah,
one of those
people ask
subjects
about it.
that and TMDX. I don't know if you're seeing that all over the place. Like,
I'm
those
not
are the
touching
ones that
that.
I'm getting asked about a lot. Grab as well.
Yeah,
Um, yeah, TMDX is like an industry. Like, I just organ
bro.
transplants. Like, I know like nothing. I can look at the financials, but companies are more than that, and I don't want to get in just. I can do it as a trade, and that's fine. I think of AMD the same way.
Yeah.
And Grab, like I have one international play, that's Nubank. I'm content with that. I don't want to go into like Southeast Asia that I really don't understand, even though it might be a grab.
Yeah, I just as you're saying that, it makes me kind of giggle because there's so many of these stocks that are pushed by just retail, like myself, Tanner, DDI, Amit, yourself, Jeremy, a whole bunch of people that make YouTube and X content, and that really drives a lot of this. Like, it plays into the mentality of a lot of people watching who are looking to get rich quicker than 65. Because otherwise you would just buy Apple, who's making new all-time highs every day, just as an example, or Google, a better example, Amazon, whatever, the SPY, and you would call it a day. But I think that if it wasn't for someone like Tanner, just as an example, new wouldn't really be on the map or on the horizon of as many investors as it is, or
For sure.
Shift 4, because they're like relatively obscure names. Grab, I don't know who started Grab. I know Amit is kind of bigger into Grab.
Chris
Um,
Patel, maybe. I don't know.
Maybe, yeah, sure, or even Chris Patel for the cruise lines, right? Like as a
Yeah.
trade, myself, yourself for hymns. I think like all of us for SoFi. So my point is, and now the reason why a lot of people are asking about AMD, I guarantee you, is because of Jeremy.
Yeah. Well, I to be fair, I do know some people that were in well before Jeremy. They've been very passionate about it, and like Lisa Su, I don't think she deserves Person of the Year. Great CEO. It's a good company. So my concern is like as far as competition, Nvidia has a product that looks like it's going to do well, competing against AMD. There's Amazon comments as far as a lack of demand for AMD's new product. And I
Mhm.
know a lot of people are like, well, AMD and data centers, that's kind of the rage. But throw this up real quick. This is also from Sherwood Media, a subsidiary of Robinhood, by the way. Like Robinhood just does it all now. But it's just showing like the U.S. data centers. There's a huge demand for it. A lot of them are under construction, just even more than ever. This is 2024, 2025. That continues to increase. I mean, it's even to the point where Bitcoin miners are getting into data centers, like everybody and their mother is right now. And when there's that much competition, you need to be at the top of your game. Nvidia, I don't have any concerns over. AMD, like I don't know. It's a question mark, and I don't like investing long term in something that I have a lot of questions on. So good company. I don't know. I'll keep watching it, paying attention. Maybe something will change. And I've changed my mind on companies before, but yeah, it's one I'm not really keen to follow on as much. Maybe at some point a trade, and I'll just lose some money on that just to write off some of those gains. That's the way of me. Yeah, it could have been Sam Solid.
Yeah. I don't know who that is.
He's a
Um,
he's a great guy on X. Gets on with him at some time, and Chris, sometimes Matt, I think. But
mm. Yeah, it's crazy. Like, I mean, I talked about this back in the summer when I was like, "Oh, I should start a friends portfolio." But it's like a lot of you guys have your own stocks and your own audience that's circles around those stocks. I don't know. It's cool to see, but it's also kind of like an echo chamber in the sense that it's not that like Jeremy just, and I don't want to pick on Jeremy because I like Jeremy. He's a good guy. And I'm not saying it in a bad way, but it's not like Jeremy has stoked a lot of people to go into AMD, but the people that are watching us also watch his channel, also watch Amit's channel. And so we will get disproportionately asked about stocks that our peers are also talking about,
and
and
it's
that's all I'm trying to say.
yeah, I don't mind being asked, and sometimes I do have a strong opinion on something that I'm not necessarily in, but a lot of them I'm just like, yeah, it's interesting, or I just don't know enough about it, or not sure, and that's because I have I have a 9 stock portfolio, so it's like super concentrated.
Yeah. I mean, in many cases, I prefer to be asked, honestly, because I have
Yeah.
a lot of respect for the intelligence of this community. And you guys collectively have gotten a lot of stuff correct. And so if one of us is like super bullish on AMD, I can't blindly be like, screw that. I'm going to look into that to understand why.
Mhm.
Same thing with you and I with hymns, right? Like we were starting to talk about hymns more and more. Manuel got in, like a whole bunch of other people who were in before us, to their
Oh
credit,
yeah.
absolutely. But my point is, there was not a lot of people on YouTube talking about hymns, and then we started talking more about hymns, and people started asking us more about hymns, and that's done tremendously. If you look at the returns from when we started talking about it to now, it's like a 3x. My point is that when somebody, whether it's Chris Patel or Amit or Jeremy or whomever, Tanner, Chris, DDI, whenever they start talking about a name, like I'd rather get asked a whole bunch of questions and be forced by the audience to look into it because I could find alpha there.
Yeah. And Nike was one of those for me too, where I'm not going in. I did some more like on hand market research type things. We actually bought some more shoes for my wife. Went into a store that it was actually JD, and they had a whole bunch of different types of shoes. And we just asked, like, actually, I think it's probably their best salesperson. Like, he was good. And his opinion on Nike is like, yeah, they're just not selling. New Balance. He said it this way. He's like, New Balance is outselling Nike, like as if like that was a. I like New Balance, so I don't know, but he was like basically making it off like, hey, they've fallen off so far. And I wasn't even telling him like I was doing it for market research, but so as far as a one that we I think bring up every single week, there's been a little bit of Tesla news. So the
By the
biggest
way,
is
we'll get into Tesla and the other topics that we have. I have a list of topics here for us to chat about, but we're gonna do the thing that we did last time. where as you guys ask questions, I'll favorite them here, and then we'll spend a portion of time at the end of this video and just do a rapid fire Q&A. So ask questions and I can favorite them here in StreamYard, and then I can start to bring them up at the end of the show. So just want like public service announcement. But go ahead.
Yeah, and to be fair, like there's several people mentioning folks that were in HIMS very, very early, data-driven investing, Adam Bergman, Tom Nash, even, lots of folks. It's just, I'm usually not the first one in, but when I'll do some research, when I'll finally do some research on something like HIMS, and I'm like, okay, it's actually gold, I'll get in. I'll have no problem doing that. But a lot of times I'll be like, yeah, it's interesting. And I'm doing research, like that's what I was doing for the 2 hours before as well. There's a name that I don't know. Maybe we'll talk like some obscure names next time if it's not like a crazy market day. Sometimes the market news slows down around Christmas, so you can talk Lemonade maybe next time. I can talk Ibotta. I'm not in that name yet, but it's interesting. It IPO'd earlier this year. So next topic, Tevis. Now that you're drinking the Celsius.
Well, okay. We can. I mean, I'm getting some HIMS questions, so we can talk about HIMS right now, and then jump to Tesla and others afterwards. I want to talk about SoFi a little bit as well. So
yeah, in Tesla too. So I think HIMS can be pretty quick. FDA decision on tirzepatide. I always say it wrong, so it's probably slightly mispronounced. Whether it continues to be in a shortage list or not.
Yeah.
Is that noon, Tevis, or do you know what time that announcement is?
It should come out around midday, I believe. The last time we were expecting an announcement was a couple weeks ago because it got delayed. And that announcement for the delay came out around 2:33 p.m. ish. So I'm expecting something around that same time. We'll see. It should be during trading hours, which will make it a fun time. Full transparency for HIMS, I didn't make a video about my options trades last week because I'm not getting great viewership on those videos. And I was like, you know what? Like, I feel like I'm bragging and, into the void. But I do have cash secured puts on HIMS at $26 and at $28 because the premiums are absolutely insane, dude. Like, I got premiums for $26 for HIMS. Let me actually take a look at my spreadsheet to see what I got those premiums at. So I have HIMS was at $29.50 on December 13th, so whenever that was, last Friday, and I wrote cash secured puts at 26 for 60 cents premium. From $29.50 to 26, 60 cents premium. Insanity. And then I also wrote earlier today, I woke up kind of late, so earlier today, HIMS was at 30 and a half, like 30.5. And I wrote cash secured puts for 27, so not 28, 27s, for 33 cents. The premiums on HIMS are crazy only because this week is a big FDA decision. Number one, you have the Fed rate cut. Number two, like you have a whole bunch of stuff. I think there's like indexes that are also rebalancing at the end of the week as well. So there's a whole implied volatility around those events. Be careful because HIMS can definitely hit 26 if tirzepatide stays on shortage, or sorry, goes off of shortage. Then HIMS is definitely going to get a hit. I think if we have a HIMS green day tomorrow, I'm probably going to get rid of those cash secured puts because I'm already like 50 or 60% in the green on them. I don't want to hold them through Thursday because there's a lot of volatility that can happen. Now, if you are in a position where, because I know, I'm trying to talk more about options, where you do want to sell options and you do want to own HIMS at a certain price, then just write it out longer dated, like write it out 2 weeks out or a month out, mid-January for 22. I'm sure you can get great premiums on those. And then if it hits, then you'll be happy. And if it doesn't hit, then you'll be happy. For me, I'm doing it much shorter time frame because I'm still planning to cut my position, like to get out of those options before Thursday. And I'm tracking, that way because I think HIMS was green today, I believe, or almost green. Yeah, it closed 0.5% down, which is basically green for HIMS.
Yeah, it started out like up 5 or 6%, then it fell down to like it's so volatile. And so tomorrow, if I'll say it this way. Like somebody asked you, and we'll do questions. Elizabeth, thank you for that question. It's not too late. Like this is a very, very small market cap. It's growing rapidly. It's very volatile, very, very, very volatile. Like if it moves less than 5% a day, it's almost
Yeah.
shocking. So tomorrow, whatever the announcement is, delayed again, that they take it off the shortage list, that they put it on, HIMS will probably move between 10 to 15%. That's the reality of it. Could be less. I'd be a little bit surprised. And so if you are interested in HIMS, make sure you do your due diligence, make sure you know the amount that you want. Just keep an eye on it. It may give you a gift. Like honestly, it doesn't deserve to move that much on the news either way, but it will. It just absolutely will.
So I will try to make a video on HIMS tomorrow, but we're also doing the HIMS weekly tomorrow, probably after market close. And in the video that I wanted to make, and also tomorrow in the HIMS weekly live stream, so please join. There's a 12-page super deep dive by an industry professional who went incredibly deep on FDA filings and whatnot, and they're putting the percentage that tirzepatide does come off shortage at 80%. If that happens, that's very bearish for HIMS in the short term, and that could lead to a huge downside move in the stock. So to Elizabeth's question, I'll just bring that up on screen. Isn't it too late on HIMS? Okay, here's the thing. HIMS is going to give you opportunities to invest. So that's number one, because it's volatile. Number two is it really depends on what your goals are, what you're looking like. If you're like, hey, I'm going to hold this thing for a long time, then yes, 30 is not too late at all, because over the long term, like tirzepatide is not going to kill HIMS in the slightest. Like it was an inevitability, and we knew. And semaglutide is also going to come off shortage as well very shortly. Now, in the short term, can you have a better entry point if you wait until Thursday or Friday? That depends on what you think the FDA ruling is going to be. If you want to play it safe and you don't own a position, one possibility is you could buy half of your position now and half of the position after the decision comes out. Because if the decision comes out positive, the stock is going to go up to 36, 37. If the decision comes out negative, the stock is going to go down to like 25. You don't know what it's going to be, so you could either wait until after the decision to start a position. You can start half now, half then, or anything in between. You can do the full thing now because you're like, hey, I'm going to hold this for 10 years. I don't really care. That's what I would say. You're on mute.
Yeah, there's no need to go all in. HIMS will give you opportunities. It's very volatile, and so you can play it accordingly. I think that the trajectory is pretty clear long term, but we could get, for even a quarter or two pullback depending on the shortage news. All right, so Tesla. Let's talk Tesla like we do every time.
Mm-hmm.
So, two pieces of news. Let me just share the whole window here.
Yes.
So first, most importantly, we were told that this was an opportunity cost, that it was a dead stock, that it wasn't going anywhere. It'd be dead money for a while. That was in the 140s. Since then, it's risen 226%, Tevis. How's that for an opportunity cost in less than a year? Will you take it, or are you disappointed?
Bro, I don't know if I should say this on camera, but Tesla has made many millionaires, and I feel like I'm going to be one of them. Because it's just bananas at this point. And this is coming from a guy who Tesla is 50% of his portfolio, and from a guy that I diversified into SoFi by making Tesla 30% of my portfolio, and also from a guy that held Tesla all throughout the 3-year downtrend, as well as SoFi. But right now I'm just having the time of my life because my top 3 positions are Tesla, SoFi, Bitcoin. And they're all doing quite well. So The main problem that I have right now on Tesla, I don't know what that is. The main problem that I have right now on Tesla is that I have covered calls that I have to roll and keep rolling.
You want to share the strike, Tevis?
Fuck. So I do have 500s for this Friday.
Okay.
And when I wrote that 500 for this Friday, I was like, dude, 500, this is insane. It was like, honestly, guys, it was, I think, $90 away.
Yeah, I mean, like, look,
for 1 week.
5-day move
Yeah,
up 17%,
yeah.
$70. 1 month move, up 41%.
Let me see what
It's
they
just
offer.
ridiculous.
Yeah.
See, where's the election? Yeah, November was it 8th?
Okay, hold on.
Yeah, just
I
a ridiculous run. And that happens with covered calls, but you have some shares as well, and so at least you're not deeply underwater. There's a couple of things that are driving this. So one, certainly we talked about the election stuff, that angle, politics, all that. Robots is another. I think it's actually probably nearer than at least I initially gave it credit. The investor thesis. We're a long ways away from consumers seeing it, but as far as actual companies, I mean, that may be like 2 or 3 years where we start seeing them ship out, maybe less. But the biggest thing is full self-driving. Full self-driving 13.2 has rolled out to a lot of people. I'm seeing it all over Twitter. And like every other version of full self-driving since 12.3.6, I believe. So a couple of versions ago. Or is that the current? I can never keep them straight. But there is a step change of improvement from what early drives indicate in this. And at the beginning of the year, there was a lot of skeptics, even among Tesla owners, even among those that bought outright full self-driving in relation to this product. Now there are very few that have actually tried it. And so this is one, Holmar's catalog posts these drives, doesn't edit them, records the good and the bad and the ugly. And yeah, LA to San Diego, 0 interventions. You don't have to hold the steering wheel anymore. You're not getting nagged anymore. It's awesome. There may be a need, for Tesla to actually upgrade from hardware 3 to hardware 4 to be able to do that. Because my hardware 3, I don't know, we played around with it. It was not great. Actually, even with Amit, I had him test out full self-driving for the first time in his vehicle, and it had some issues in New Jersey. It's not perfect. It's not 100% ready yet, but it's compelling enough that we're not sure if we're going to do this road trip or not that we planned this next week. If we do, I'm getting full self-driving for the month. It's going to make that drive just a whole lot easier. Like, it's real enough to do that. And next year it may be, unsupervised here in Texas. So that's when it becomes really, really real. Yeah, it's probably New Jersey's fault. That's a good point, Flash.
Yeah. I get, like, here's the thing, man. I had a good friend of mine just message me. Sorry. I had a good friend of mine message me earlier today, and he was just like, dude, let some of your Tesla go. Because this move is irrational. In other words, not based on fundamentals. And he's naturally a little bit more, a lot more conservative than I am. He's not a degenerate gambler. But what I responded to him, and I also, posted a screenshot of that conversation with a little meme on Tesla. I said, look, Tesla is a company that has always traded on story and narrative, not necessarily, on fundamentals. Like, if you look at Tesla from a free cash flow perspective, or, whatever fundamental metric you want, then it'll be overvalued. People were saying this in 2018 when they were comparing Tesla. Tesla's now bigger than Ford. Tesla's now bigger than GM. Tesla's now bigger than Ford and GM combined. And then it was like, Tesla's now bigger than every other auto player combined. It's like, yeah, guys, because one is like, the market is forward looking, and there's one company that's innovating and the others are not. And so if you follow that trend and extrapolate, then obviously Tesla's going to be, more than those combined. And so I do think that, like, hey, what happened since Trump got elected, since November 5th to now, to warrant a 100% plus move in the past month? Like nothing, except for the fact that now he's buddy and he's going to get more friendly treatment by the administration. My point is that I don't I'm not hating the move. I don't disagree with the move. I'm profiting massively off the move. I love it. But people are buying it for full self-driving. They're buying it for Optimus. They're buying it for all of these other catalysts that we've known for a long time. It's just now they get a more like rosy colored glasses treatment because like I feel like Trump was like that spark. They're still far out though, right? And so people are just buying the rumor right now, if I can use that expression.
I think that's mostly it. I think their quarter four is going to be the best of the year. It's going to be amazing. Quarter four usually is anyway for auto manufacturers. It's a seasonal product, and these are cyclical. Interest rates are falling, which helps. They've run a lot of promotions, which helps. The biggest factor though is well, I think there's two. Like Cybertruck's demand is actually going up. It's still, and this is actually surprising because I don't actually like the look of the Cybertruck. I do like some of the wraps; they're pretty cool. But if someone gave me a Cybertruck, like great, I would never buy one. But there's a lot of appeal for that product, and so that's certainly good. But there's a demand lever that's been pushed just because of the potentiality, and I would say likelihood of the EV tax credits being gone. I think that we have a year. And if so, Tesla is going to do a lot of business over this next year, especially if the writing's on the wall very early into this next year. Like, hey, you have until maybe even just until the fiscal year that begins, I think, at the beginning of October, if I'm not mistaken. But regardless, a lot of people are buying Teslas now that may have bought in like 2 or 3 quarters. What that means is quarter four is going to be very, very robust. We see this also with insurance registration in China. We see that with basically every indicator that we have. I see that even with my referrals. I've had 3 people in the last month that have used my referral code. I've only ever had 3. And this is, a lot of this is a forward demand lever that's been pushed. And I myself, we're eyeing another Tesla. Yep. We really want that Model Y refresh. Not out yet. And so I think that we're willing to wait, even though we may risk losing that tax credit. So
here's the thing, Roy. And I'm just playing devil's advocate, right? Because I agree with everything you're saying. The devil's advocate point is this company increased like 700 billion in market cap over the last, 6 weeks. So it's not, it's not something that, if they double their sales because of everything that you mentioned, the regulatory credits, the refresh cycle, like everything, if they literally 2x their sales, would that justify a 700 billion plus move? From a fundamental basis, no, right? And so my point is while everything that you're saying is bullish and it's positive, it's also not a powerful enough catalyst to drive up such a violent move.
The only thing that's because it is. It just did. But what you're saying is it's not. You don't think it's sustainable,
dude. I don't know. I would be hard pressed to find somebody that's a retail investor that's buying Tesla at $500 a share on regulatory credits. They're not. They're buying it on Optimus. They're buying it on FSD. They're buying it on Tesla becoming the new Uber with half the price but double the profit. They're buying it on all of these other aspects. And I understand that. I think that, for myself too, like would I buy Tesla at 480? If I did, I wouldn't be buying it on anything that's happening today because at the end of the day, we know the narrative for Tesla as a vehicle manufacturer. They're supply constrained. Even if they had the best product on the market and that just got better, they're still going to be supply constrained. And so it becomes a very an easy formula to extrapolate outwards to say, okay, what should Tesla be trading at, even if we attach a very healthy premium multiple to what they're producing and selling, assuming they're selling everything that they're producing. Great. Put that all aside. That still doesn't account for this massive gap up. That massive gap up is the call option on Elon's brain on the potential for Tesla to create new innovative technologies. And what is that? What is that paradigm shift? It's a secondary layer where they're charging subscription, where they're doing FSD. It's Optimus and the efficiency that's going to unlock. in terms of everyday tasks. Like, it's all of these other things, and that's the premium multiplier, I think, on top of the premium that they're already getting from the vehicle sales. So my point is, yes, I agree, but also there's all this other stuff that's way more sexy of a story that the average retail investor would be like, oh man, let me FOMO into Tesla at $500 a share. Not because of regulatory credits, because they were like, I can see an Optimus in my house cooking and cleaning for me, and I could see what that like unlocks for my life. But that's still 5 years out minimum, in my opinion.
For the consumer, it might be. I don't think for
Yes.
industrials it will be.
Yes,
And
agree.
the revenue from that will be surprising, though they certainly won't be the only player. There'll be a number of those, just like there are vehicle companies. But the one thing that Tesla has is scaling. They absolutely have the ability to scale and ship out products in mass. They've shown that. A lot of the other companies that are in that race as far as the robots, they have never done that. Never. And we see, Rivian is a good company. They don't know how to scale. They're actually going to hit profitability actually for the first time this quarter on the basis of regulatory credits. They won't for a long time after that. They'll still be burning money. Yeah. Thank you, June. Appreciate you. Come on over this way. That's right. We'll give you my Tesla referral code just for coming over. No,
hey man, you're up to 2K subscribers. I was watching one of your videos earlier on, I think the why I'm not selling SoFi one, or no, actually, I was watching the Robinhood Weekly, the second episode earlier today, and I was, oh man, this guy's up to 2K subscribers. It took me so long to get up to 2K subscribers. Like, it took me a long, long time. But
yeah,
so you're killing it.
I started with like a couple hundred before I even had a video, because I was with Amit and he's like, hey, he's starting a channel. He doesn't have any videos. Go and subscribe. I'm like, okay, start with a baseline of 200. You guys are awesome. But
That's amazing.
No, so I mean, there's interest rates, there's full self-driving that we already talked about. There's a political, like, Elon will not be public enemy number one as far as politics, like maybe in California, but a lot of that's resolved. There's still like the Delaware judge stuff. We've talked about that before. But largely, like, they've proven this is a great product. I think the stock was not by a fundamental standpoint, but as far as like its TAM and its ability to actually reach that, and it's just a unicorn. And like, they're being more and more efficient with the cost, with COGS, and also even with their employers, or not employers, their employees. They're just a very efficient, very clean company without any debt that's compelling, and it was undervalued in my mind, deeply so when it was underneath 250.
We were both buying it at 160.
Oh, yeah. Now I can't say it's undervalued, but I don't think like this is completely unjustified. I think a lot of the move is the market always overdoes things. And especially on Tesla, it overdid the sell-off, and it's done that before, and it'll do it again. It's overdoing right now, I think, as far as the run-up. And it wouldn't shock me if it pulls back, like 15 or 20% in the next, couple of quarters. But that being said, it could keep roaring. This is a bull market. We see some of these companies, I'm not going to name any, that just keep rallying and running, even when they are already stretched all fundamental aspects of that. Now, I wanted to show you this too and ask what you thought about this.
So
this is the headline.
Just before we jump into that, just how I play devil's advocate on the first part.
No. It's a Gordon Johnson advocate.
Which one?
Gordon Johnson advocate, not devil advocate. You're
sure. Just how I put on my Gordon Johnson mask on the first one. I will go on the other side in terms of the short-term momentum. Like, how they say don't fight the Fed? Don't fucking fight Tesla stock when it's on a run-up, dude. Like, that thing will rip your face off. And I'm learning that lesson the hard way with the covered calls, because the thing is moving like $100 a week. Look, I think in the short term, like, it's obviously going to pull back to find some. It's got to essentially build a base, because it's just on a parabolic move upwards. I don't know where that's going to be. Would I be shocked to see this thing have a 6 handle, as early as January? I definitely would not be shocked at all. Hell, at this point, you could see a 6 handle by the end of next week, dude. So my point is, when you have parabolic moves upwards, irrational can get to crazy irrational, can get to like stupid irrational, like that.
So And you're wearing a green shirt, so that you're on the right side of this, and it absolutely could like get in the 500s or 600s and before a pullback, and it could be a big pullback too. It tends to run for a long time in either direction and then consolidate. So news as far as competition, we back before I was in Tesla, 2018, 2019, 2020, the drumbeat was competition is coming, competition is coming. We've seen competition felling left and right. We've seen competition go out of business. We've seen competition supposedly be the lead innovator of the industry and sell less than 100 EVs in an entire year. But this looks a little bit more credible. This is from Car Dealership Guy on Twitter. Honda and Nissan in merger talks to compete in the global EV race. The plan includes integrating Mitsubishi, which Nissan owns 24% of, and it's to form a major auto group, so kind of like Stellantis, to be able to face this rising EV competition from China, although a lot of those Chinese EVs are subsidized heavily by the government or they're going out of business. Not all of them. There's some good ones too. So what do you think? Is this competition for Tesla that's coming?
I mean, I feel like, we've harped on this point multiple times. Will there be other players? Like if I get into a time machine and I am transported to 2040, am I going to see other EV manufacturers on the road? Absolutely. Am I going to see them actually, stealing significant market share from Tesla? No. The reason is because I do believe that fundamentally it comes down to an innovation perspective. And if you've ever been inside of a Tesla, you'll realize that, going into from, a Toyota to a Tesla it's drastically different experience from a user experience perspective, like on a very simple fundamental basis. Like what do users like from the way the door handle is to the self-driving, which blows everybody's mind, to the cheetah mode, and like all of these other, like all the way down to, you can play video games in your car, like that kind of stuff. I think that will always exist. And that the reason why is because you have a company that at their core is innovative, and these other companies can compete because, like, I can buy a cookbook and I'm sure I can make the same recipe that, name a famous chef makes. Will it taste the same? Absolutely not. Like there's something to be said about Tesla as a company for innovation. Them releasing these new products that are drastically different, like Cybertruck, was massively polarizing and still is to this day. Like I saw one driving down the street in this like all black matte wrap, and I was with a couple of buddies and they're like, "Oh, like look at that." Like, and one of them said, "Oh my god, that's so obnoxious." And another one said, "That's so cool." Like, I don't think Nissan or Honda or any of these other players have, number one, the vision to think about something like that, and number two, the balls to actually execute, and number three, the skill to bring it into production. They're always going to be followers. So will there be competition? Yeah, of course. Will it be significant enough to eat Tesla's, lunch? Absolutely not. And that's not even accounting for the bot or anything else.
Yeah, there was a guy, this is months ago, we were looking at buying a second used Tesla. And we ended up not getting his vehicle, but we drove to San Antonio and checked it out. And I asked the guy why he was selling it. He had a Fisker. He bought a new Fisker and was getting rid of his 2021 Model 3. And I'm like, man, the guy was pretty well off. So he's going to be fine, but man, I can't believe this is more credible competition. They at least know how to scale. It might take them a while. And it's overall like not a bad thing just for EVs to gain adoption. Like the real competition is the industrial combustion engine. And I think as Tesla continues to improve, as the bottom line improves as well, it's going to continue to eat more and more of that market share. Hopefully not by a government mandate. But speaking of government mandate, we need to get to this and then SoFi and then questions. So maybe a quick one on this.
And the Fed too. The Fed decision tomorrow.
Okay. Yeah, we've done the Fed. Fed decision is tomorrow. They're going to cut. Like we've talked about that before.
Wait, so hold on. Are they going to cut?
Yes.
And what do you think the market's? Just 2 seconds, okay?
Okay, let's look it up.
I can't remember where I saw this, but basically the thesis is that the commentary is going to be just as important as the actual decision, because right now a cut is like what 95% plus priced in on the Fed Watch tool. Let me, if you can pull it up. I think you're
Yes, I've got it right here.
yeah. So like 95% essentially priced in. But the commentary, I think, has the potential to really change that narrative around as to how stocks react, because this is the end of the year. I'm sure Powell will provide some commentary around 2025 probabilities, whether we're going to get 3 rate cuts in 2025 or 5 rate cuts or anything in between. I think that if it's hawkish, then that's one thing, and if it's dovish, then we're climbing higher into full blown Santa Claus rally. I think the actual cut itself is practically priced in. So that's the part that I want to talk more about.
Yeah, this is for a year out. So like you're right. Like it's if a cut doesn't happen tomorrow, that would be shocking, and the market would like not be happy for a while. Like it's a bull market, it'd still go up, but this is a year out, and you can see there's no strong consensus here as far as where the target rate's going to be. That's going to help. I think the Fed will provide that, maybe that dot plot that they had before. I want what this 0.2% person has, 2.75 to 300. I want to move the house. I want to have a low interest rate. That's not going to happen. This is probably not going to happen, barring some sort of major recession. But it would be great to have, 3 handle. But we don't know. There's a lot that's not known. And so it is a really important one just for the commentary. But yeah, we're getting a cut.
What do you think the commentary is going to be?
Ambiguous. I mean, that's what Powell does the best, right? Is he'll go in and be like, well, we're seeing, this, and inflation's doing good and tracking well, but we're still fighting this. And so we're going to be data driven and make sure that you like, comment, and subscribe on Data Driven Investing's portfolio on Twitter. And so we see we're divided over the number of cuts. There will be cuts next year. But probably like in January, we're just going to have to see what the data says. Right now, I would say it doesn't warrant a rate cut in January, possibly not even the first quarter, but by the second quarter, something like that. So
let's play a game, and I'd love people in the chat to also participate in this. What is one word or term that will not be mentioned tomorrow? Roy, you can go first.
Transistor.
Transistor. I thought you were going to say transitory for a second. I was like, ooh, ballsy.
No, I don't think that they'll say transitory either. I don't think he said that in a while. I was going to go with that, and I'm like, I better not. So yeah, stagflation. That might actually. There might be a question on that if it's not.
I'm going to go Bitcoin.
Bitcoin, yeah.
Ooh, this is a good one. Recession.
I think that one will be mentioned. Somebody's going to ask.
Maybe.
Yeah.
Volker.
I'm curious, actually, if tariffs. That'll be mine. It might be mentioned. I'm going to say that it won't be this time, but that's a real chance of accelerating inflation. And so I don't know. There's a possibility that the language comes out and he's like, until we have certainty on tariffs, we're going to hold the line here with this cut and just be very data dependent because we don't want inflation to reaccelerate.
Yeah.
51st state. I like that one.
Man,
Canada.
A guy can dream. Anyways, let's go to your news.
All right, real quick on this one. Then we'll talk SoFi and then questions. So be throwing your questions in the chat and we'll get to those at the last 10 minutes. So we've talked about this before, maybe 6 months ago, as far as whether Congress in the United States should be able to trade or hold equities. Of course, Nancy Pelosi is the greatest trader ever, or at least her husband is. And so there's some pushback from the president himself, President Biden, calling for a ban on congressional stock trading, saying nobody in the Congress should be able to make money in the stock market while they're in Congress. Tevis, what do you think?
Yeah, I mean, I think it's kind of rich that he's saying this now that he's about to step, right off into the sunset. And that he wasn't saying this, 4 years ago, or during his 40 plus year career as a politician. Just saying, dude, I think I think incentives matter. I think people are inherently they care more about themselves than about like I can't remember what it's called, but there is like a hierarchy of like you care
Needs.
about yourself and then your tribe and
Maslow.
then your huh?
Maslow's hierarchy of
No,
needs.
no, no. It's not Maslow's. Maslow's is like what your needs are, but this is about your like intentions or your identity, and it's like self, tribe, community, city, and basically like the bigger you get, the less you care. You have this in the tragedy of the commons as well, which was this thing. Basically, the concept is if it's shared community space and nobody is directly responsible for it, nobody will take accountability for it. Um, where I'm going with that diatribe is that people are inherently self motivated. They care about enriching themselves. Like right now in Canada, I don't know how much you know, but like the entire country is essentially being held hostage for one person's pension. I shouldn't have said that online, but here we are. So why should that even matter? Because that person can and because they want to. Um, and I think that a lot of politicians, at the end of the day, it becomes a game of incentives. Like I think it was Charlie Munger who's like, "Hey, show me the incentive, I'll show you the result." I've heard that in Nordic countries they don't even have a salary for uh, Congress people, for senators, for public servants because they're like, "Hey, this is a public service that you are doing for your community, and if you are not inherently motivated to volunteer your time, then we don't want to like we don't want to create the wrong incentives for this to be a career where now kids are coming out of, college or university and the top careers that they want is like influencer and politician because they think that's a fast track to being a millionaire. That's not the right thing that you want, man.
No.
And so, that's my whole thing on it. And like, should Congress, and I think you can read through the lines of like where I stand on the Congress trading. I just think that it's a very, very incredibly slippery slope that opens the door for a lot of backroom shady deals, a lot of nefarious activity. And you have to be the most virtuous, like pious person in the world to be able to weave your way through that, especially over a multi-decade career. And nobody is that.
Yeah.
If I was in that position of power, I would absolutely be in that gray area. I'm sure you would, probably be way better than I would in a more black and white, like, hey, I'm trying to do the right thing. I don't want, but like over the long run, you're put into multiple situations where you can very easily abuse that power. And you can even do it in a like negligent way. Like you're having a conversation over dinner about a bill that you just passed. Like I went on a few dates with a lady who works in government here. And honestly, it's not a big deal because 4 out of every 10 people work in government here. It's like a quasi socialist state. But she was telling me about like some of the bills that she was working on. And she was like, "Hey, I'm presenting them to the House. Like there's going to be a vote on them, so on and so forth." And I was like, it was typical conversation. It wasn't anything like, "Hey, actually invest in this company or that company." It was like the most cat. And so my point is like, if Nancy is married to like a professional stock trader and she's just having that normal dinner conversation, even if she's not meaning, which is like we're giving her the super benefit of the doubt, that stuff slips out because again, it's just so yeah. Anyways, that's the whole thing.
Yeah, I don't want a total ban. I think it's a mistake. You want your leadership, whether it's in a company or running a country, aligned with your interests, their interests and your interests. And so if they don't hold any stock, then they're like Tim Walz. And I think that's very dangerous when he has no incentive to do anything that ultimately will help propel the United States economy forward because he's not holding any public equities at all. So I don't mind like individual, like I think there's a couple of solutions. One, probably the easiest is you can only buy maybe index funds. Index funds is like fine. Like if Nancy Pelosi YOLOs into the S&P 500, great. I mean, that's fine. It's broad enough. Everybody wins in that scenario. If they want to sell it, if they want to short it, fine. Um, maybe not short, but short the entire U.S. economy and then really cash in on that. But no, the other option too is maybe allow ETFs as well beyond those broadband index funds. Or we can do maybe I'll call it the GameStop rule that you just take away the sell button. You can buy more. So it's like the opposite of the GameStop. You can buy more. You just can't sell while you're in office. And it has two different benefits from it. So one is you have to think about this company long term.
Right.
And second, if you want to realize gains and not just take a loan against it, but actually realize gains, you need to get your rear end out of office. You can't be
Yeah.
there like 30 years
I love
unless you
that.
want to take loans against it. But
I love
but
yeah, go ahead.
if this ban happens and Congress, all of Congress, many of whom are wildly wealthy, cannot trade stocks, do you know what they're going to trade, Tevis?
Crypto.
Crypto. Not all of them, but a lot of them. And
Sure.
this happens also with names like, Jordan Belfort, who is banned because of violations, numerous violations from trading equities. He trades crypto all the time. This would become a boom for crypto.
But it would also just lead to it would be a fast track to more regulation in crypto, which I don't think anybody really,
Eventually.
I mean, like the Hawk Tua coins are not going to happen, and I agree with that because people get rugged unknowingly. But at the same time, I do think that the more you stifle the free market, I'm more libertarian in that perspective. That's not going to be a good outcome because you just put guardrails on things that from people that are inherently inefficient because they have no reason to be efficient. They have nobody holding their feet to the fire. The feedback loop for election is so goddamn long. And then, you also have just, it opens a door for a two-tier system where people in government who have access to information can outperform people who don't. So I love that idea around, hey, you can buy individual names, but you can't sell them while you're in office. Hell, let's even start very basic. You can't trade options, let's just do that. You can't do any levered plays. ETFs are great, but at the same time, you have family members, friends, or whatever that can trade on your behalf, quote unquote. Of course, that's straight up illegal, but good luck proving that.
Yeah.
So, yeah, I do think something needs to be done because it just sets a bad precedence, man. It's become a bad joke at this point where everybody knows. There's a whole goddamn app called what's it called? Autopilot, where it's hey, trade like Nancy, and there's the Nancy portfolio and all this stuff, and it's just become so degenerate at this point where it's a lack of respect for the office.
The autopilot founder, he was at both Robinhood events and we talked to him a good bit. He tried to get us on his platform, but I'm like, dude, I hardly trade. I'm not a very good trader. You don't want me. Unless people want to lose money or make a lot less than just holding long term. But okay. Yeah. We do want to talk about SoFi and then let's get into the questions. So probably we have SoFi Weekly. We'll talk more on Friday, but you want to just give it a quick touch on Tevis?
Yeah, so basically, there was a Form 144 that dropped on Monday, whereby Anthony Noto was putting 2 million shares as collateral to take out a loan for $22.4 million. I made a video on it earlier today, and we don't know what he's going to do with that money. He could just be buying a nice little boat or a new house or anything in between, realistically, or he could be diversifying his assets. But essentially, he's using his SoFi shares as collateral. Now, a couple things. I think in the short term, this has a benefit because if he were to sell those shares on the open market, it would not only tank the stock, it would also incur a taxable event for him, whereby he would have to pay taxes on that money that he raised. So by taking out a loan, he can avoid that tax situation. Number two is that he has more stock that's coming his way if SoFi hits those performance tranches in summer of 2026, which start at $25, which is what, $7 away, $8 away. And then number three is the way that this deal is structured is quite interesting because the deal highlights that if SoFi, what's it called? The cap rate, the maximum profit area, if you will, is $30.74 by February of 2028. So it's essentially like a straddle situation where it's a range that the stock has to be at. Um, and based on that range, he would have to give up different amounts of stock if he chose to pay back in stock. So think of this. I mean, the way that I was thinking of it was like an option, for example. Like he still owns his shares, he still has the right to all his shares as a shareholder, but he also has like now a commitment against those shares for that February 2028 date. Now, the range is from $13 to $30. So essentially, in so many words, he can either choose to pay back in cash, which is great, and that's solved. Or if he does pay back in stock, if SoFi is trading for under $13 in 2028, he has to give the full 2 million shares. But if SoFi is trading above $30, 30.74, so 31 call it, then he only has to give back 849,000 shares, something like that, 849,707 shares, which is
And
cool because it's essentially less because SoFi has appreciated and he doesn't have to give up as many of his shares.
and if it runs up an insane amount, he'll probably just settle that in cash one way or another. So
Yes.
yeah.
Now, maybe let's get your thoughts as a news piece, and then I want to go into like my the post that I made earlier about this like degen play. But go ahead.
I mean, like same. Is it initial take was, right after I insider buy, I'm like, hey, this is awesome. The insider sell, I'm like, oh, bummer, it's his first sell, but it's not a sell, it's a loan, publicly disclosed in a way that didn't have to be disclosed. We don't know why. Like, there's that saying, and I'm sure everybody's heard it in the audience, but there's many reasons to sell. There's just one reason to buy, and so it could be for any number of reasons. He could be buying, a nice yacht, and if he wants to, it's his money. He can do that. He's invested a lot. It's actually less than he put in of his own money, not including any PSUs or RSUs. And there was also quite a few insider sells, but that's a quarterly thing, especially with. Well, I won't name his name because I've said too much about him before anyway. But he's the guy that always sells every single quarter, and I'm going to try to not be critical of him because I always am. So
does his name start with a J and end with the?
Yes. It could be anybody that's name starts with a J that works for SoFi, though. Could be anybody.
Yeah. Yes. So, anyways, so Anthony Noto took out a loan against his shares. Now, what will he do with that money? What would you do, Roy, with $22 million of SoFi gains that you took out as a loan? That's what I
I'd
want to
probably
get.
buy a Tesla.
Okay, so what would you do with the rest of the $5.9 million?
Put it all in Bitcoin.
That's a possibility because Anthony Noto is very bullish on Bitcoin, and we know that he is, because we've had access to his portfolio. He's talked about Bitcoin in the past before he's been forced to essentially remove Bitcoin from SoFi. So I think Bitcoin, it's on my top 5 list of things that Anthony Noto does with that money. If I wanted to diversify, I would do it, through Bitcoin as well.
Yeah, and like that was a semi-serious answer. I would buy, a Tesla. I would, diversify as far as, but it'd be an investment, largely investment. Like that would be the reason to take out that loan. I'm not buying a $22 million house ever. Canadian. Oh no, 22 million USD would buy all of Canada. You don't realize like how strong the US dollar is. So 51st state, and I would name it like Royistan or something like that. So
yeah.
And Tevis, you would be the prime minister. You only need to do it for a day, but I want to make you that just like one time. So, but no, like it could be any number of reasons. It wouldn't shock me if it's for investing, which leads to your piece.
Yes. Yeah. Okay, let me throw this up. All right, this is super degen, guys, so get ready for it. It's not going to happen, but yeah, Uzbekistan. I've always wanted to be a prime minister of a stan, so this could be my chance. Okay, could Anthony Noto pull a sailor on SoFi and essentially use that $22 million to go right back and buy more SoFi shares? Ultimate degen play. But not only that, it's also the ultimate bullish play if you think that your stock is going to be appreciating more and you're tapped out. Because if I don't have net new funds, what do? I take out money from the bank and I pay a super low interest rate, which I guarantee you Anthony Noto gets the best interest rate out of everybody here. And I go buy more of the thing that I think is going to go up. So if Anthony Noto takes $22 billion, he can buy about 1.3 million shares at $16.50. If the price is above $30.74 by 2028, he can give up 850,000 shares of the 1.3 million he just bought, and he'd have about 500,000 shares left over. And the profit from just those 500,000 shares left over would be over $7.2 million, which is just a gain from today's prices to $30.74 where you'd have to give them up. Not bad, right? I mean, you're using 22 million and then you're paying off your debt, and then you still are left over with 7.2 million in gains. If SoFi hits that price. But at the same time, the reason why I think it's not going to happen is not because I don't think Anthony Noto wants to make it happen. I don't think that anybody who would give him that money would let him buy back his own stock, because that's just counterparty risk, essentially. Like if SoFi goes to zero, then, Goldman Sachs in this case loses twice over. So like I can't go to my bank and I essentially pull out money and buy Bitcoin with it. Like the bank would just be like, hey, what do you need this money for? And I'd say, I want to buy Bitcoin. They'd be like, yeah, go fuck yourself.
Yeah. No, I mean, it's still like some institutions are very on board with Bitcoin, a lot more now. My own broker, it's a lot of my retirement funds from back when I was like 13 years old. That's the very conservative portfolio. I asked him like 13 months ago what he thought of Bitcoin, and he's like, no, it's terrible. Like, don't invest. I'm like, yeah, I'm going to anyway. So it worked out. But it wouldn't be surprising if he invested, in a diverse number of funds. I don't see him doing a sailor approach, even though I think it would probably work out very well for him. It's just not in his personality to be degenerate, not as a banker.
What do you mean, man? It's in his personality to bet on himself. He's always done that, and he's bought over 2 million shares of SoFi on the open market. Even when the stock was free falling from $24 to $4, he was still buying up shares. This is the exact same thing.
Yeah, I don't think it's quite the same thing to take cash that you have on hand versus taking a loan out against your current shares. It's a little more complicated than that, and I think that a lot of what Noto does and a lot of what Noto says and who he talks to as well, he's concerned about how it appears to the market, how it appears to investors, and so while we would appreciate it and we would certainly like it, I think there's a lot of people, even though it's not a heavy institutional name, that would have concerns. Like not everybody loves the Michael Saylor method of approaching a business. Like I don't invest in strategy. It would have been great if I did. I just do not like the model. Bitcoin's going to pull back. It's going to have a crypto winter at some point, maybe a year out, maybe even further. Yeah. But man, that's what that business does. And it just, I don't want any part of that. Just like, I believe in Bitcoin, but if SoFi announced that they were using a certain percentage of the cash to buy Bitcoin and just hold it, I would not be excited about that.
Yeah. Yeah, it's fair. I mean, if he does end up buying more SoFi shares, we're going to take a look. There's going to be another Form 4 dropping over the next couple of weeks, I would imagine. Again, I've mentioned that I think it's an incredibly low likelihood of him actually doing that, but it would be insanely bullish if he did, especially because I put in my post, it's super poetic that he's using the same money from these financial institutions that have been short this company for years to buy shares of that same company that they were short. Like it's just cherry on top of the, situation that we find ourselves with SoFi rallying so much.
And it would also be really fun. So I hope it happens for both reasons, but I don't think it will.
Yeah.
Last thing, so questions. So you want to pull up some questions, Tevis? We'll do rapid fire.
Okay. All right. Let me start pulling up some questions. So, have you done a valuation analysis on HIMS? What's your target price for what year? Roy, you can start.
No, that's not really the way I operate, to be honest. I know some investors do. More mature companies, I do. Like,
Yeah.
when I'm looking at companies that have been around like 10 years, 5 years, whatever, like Ibotta I mentioned, I'm looking at that as far as valuation analysis. HIMS is very early in its growth curve.
Yeah.
And I think you can get hung up on the fundamentals, like the PE or the PS, too much and really miss the fact, like even PEG, great measure, but and it has its place. But for me, I start with qualitative first, and I look to make sure, like, is the leadership there? Is the culture there? Do they have a differentiated product? Are their margins improving or actually going the other direction? Are they cash flow positive? What does their free cash flow look like? How are they allocating funds? All of those sort of things, and also look at competition in the marketplace. And I feel like I've gotten a pretty good handle since I've become a HIMS investor. Initially, there's just a lot that I was learning every single week. There's still new stuff that I don't fully know. But as far as a qualitative analysis, like, it's a phenomenal company. It has a very strong moat. I think it's a leader in this business. Its market cap is still very small, and it's in the early innings. This is one of those where it's going to grow even without GLP-1s, probably north of 40%, I would say, this next year, which is an acceleration actually. With GLP-1s, it'll be higher. Some of the year-over-year comps will be a little bit challenging. There's competition. There's always headline risk and everything. But as far as target price, I don't have one. I don't have one. As long as they are executing and it doesn't become wildly expensive, which would be like in the triple digits. And it's possible because HIMS is just, it's crazy. But like in the triple digits over the next quarter or two, yeah, I would take profits at that point. I would still have some, though. This is a company that I want to hold a long time, at least 5 years, maybe 10 years. We'll have to see how it plays out.
Absolutely. I don't have much to add on that because that's exactly how I would have answered that. Other than to say, HIMS right now, I would be looking at the market cap for a company like this, and I would be trying to extrapolate out what I think the market cap can, like the market capture, of the total market share, what I think HIMS can eventually end up being. HIMS right now is still under $7 billion, even with the run up. I think it can be much larger because if you look at the total addressable markets for all of the spaces that they play in, all the products, it's massive. And that doesn't even include all the markets that they're going to be entering. And so there is a huge premium that I put on that innovation and the fact that they're fundamentally solid with, profitable, no real debt to speak of, and growing like 77% a year, 93%, I think, is what's expected for this next quarter. That's amazing. And a price target really implies that there's a price that you would sell at. And I think that really becomes a question of time frame rather than, a specific price. Because to Roy's point, like if HIMS went to 200 in the next 3 months, would I sell? Probably. If HIMS goes to 200 over the next, 5 years, would I sell? Probably not. Again, it depends on if that story changes or not. But right now, the story is absolutely strong. And the mistake that I don't want to make, because I have in the past, is to not let, like, taking for granted companies that are this fundamentally strong, because you won't find them every day. And when you do find them, you have to really, give them the respect that they deserve.
Yeah.
Where's Bitcoin going? To the moon. Next question. I think, I mentioned it a couple weeks ago. I think that Bitcoin can hit 120 by the end of the year. Back then, a couple weeks ago, you guys were like, "Oh my God, we just broke 100, Tevis. What do you mean 120?" I think we're at 108, 109. So another 10K by the end of the year. Not crazy.
Yeah, 105, by the way. It's volatile, and it'll probably fall underneath triple digits. It could even, like tonight. It has never pulled back to that, what is it, the pre-election high. So if it gets down into the 70s or the high 60s, like, I'll probably just buy some Bitcoin outright, honestly, at that point.
Yeah.
It probably will wait until crypto winter for that, but I mean, it's volatile. So, but I think it'll just keep going up over time. I think it has a lot of ways to run. I'm guessing, but I don't feel certain about this at all, that crypto winter starts late next year. It could even be postponed a little bit beyond that.
Yeah. Are you going to write covered calls on Rocket Lab? He's saying this just because he wants Rocket Lab to do
Go to
the
the moon.
inverse. I am writing cash secured puts on Rocket Lab. I wrote them last week. I
There
did
you
not write them. No, sorry, I wrote them 2 weeks ago. I did not write them last week. I don't have any on right now. But when Rocket Lab was hitting 23 or 22, I wrote 20s, and that was, treating me well. I think if there's opportunity, I will do cash secured puts. And I don't have a position in Rocket Lab right now to speak of, so I'm not doing covered calls. What are you thinking on Celsius? I'll start real quick. It's going to get tax loss harvested for the rest of the month. I'm waiting for that. And then I'm probably going to buy leaps in January. That's sort of my strategy.
Yeah, I'm passing. Too much competition in that space. It's a commodity. I don't really even like to drink that much. Peach Vibe and the vibes are okay.
Yeah.
But I'm seeing a pricing war from a lot of different vectors, at least here in Houston. And Houston's a pretty major market.
Have you looked into Grindr since Amit is bullish? Is that gay app? Like gay Tinder?
I think so.
What's Grindr, June?
I think it's a dating app, but I don't know.
Grindr. Yeah. World's largest social networking app for LGBTQ. What's the ticker?
Yeah, I don't even want to look it up because the search history.
GRN.
It's bad enough. Like, that's the one thing about being a HIMS investor that stinks, is that will change the ads that you get, because you'll like be searching for HIMS and on the website. And usually I go on incognito mode, but I forgot at some point. And yeah, now it's like, oh yeah, hair loss, and you need sex pills and all these different. And it's like, come on.
Holy, Grindr is popping off, man! From 36 cents to $6. Jesus Christ, that's crazy. Are they owned by Match? I guess that's my first question. Knowing nothing about the company or fundamentals, I know Match owns Hinge. I know Match owns Tinder. Bumble is the only one that Match doesn't own. They own like Plenty of Fish. They own OkCupid. They own all of them basically. So that would be my first question. Are they? Well, I guess they're not, because they don't have their own ticker. So that's a stupid question that I just answered in real time. Yeah, I haven't looked into them, June. I don't know. I didn't even know it was a ticker until you mentioned it. So maybe I'll take a look at the fundamentals.
In incognito mode, though.
Yeah, I already fucked up and Googled it, so I'm gonna be getting
your Twitter feed will be full of unless you paid for that premium. So
thank you, June, for that.
Got him.
Yeah, a lot more. You have a serious question. Some people are expecting SoFi to 20 million users from 10 million. How can SoFi achieve this? Would they need to go somewhat international? Dude, like, Heinzie, the US has like 360 million people, something like that. Like 20 million is a drop in the bucket, relatively speaking.
And so usually in the US, people have a couple of different banks, even if you're not like super well off like Tevis. So, we still have Wells Fargo, and we're also customers of SoFi. And we actually have a small loan with Fifth Third Bank as well. So we're technically customers there, just because oftentimes when you get a loan, they'll sell it to somebody else. It's annoying. But we'll probably get that one paid off here earlier this year.
Let's take a look.
But yeah, like, it's not all just like bank customers. So easy. I saw. Oh, so related. Like, when Twitter changed its name to X, I was very careful to communicate with my wife. She doesn't, look at
like, honey,
like,
these statements.
But like X.com, now it's just like, oh, it's Twitter, But like when it was new, is like, it sounds like something explicit. So I'm just like, okay, yeah, this is what it is. It's name changed. Yeah.
Okay, next question is, I really like these rapid fire questions. Does the market drop tomorrow on a hawkish cut, or is that expected?
Cut is expected. I think it's probably priced in. It's a bull market, so it'll probably rally a little bit and then fade. But who knows?
Somebody just walked into the wrong room. We're talking about gay dating apps and Viagra.
I saw
Yeah.
some GameStop questions. So I am swing trading GameStop. I am selling. Basically, I'm willing it. So at this point, I think I'm at 31. Let's pull up. Just see where it is in the overnight market. It's not one I want to hold long term. I just don't see a lot of risk where I bought it at. Yeah, it's 31 and some change. So I'm fine with it getting called away. I might sell if I don't have something more compelling. Puts on the other side of that, but Hims is always a good target too.
Let's take a look. Yeah, I think that it's going to be just depending on the commentary. So the market might be somewhat skittish going into 2 p.m. and that's when you're going to probably see the volatile moves up or down depending on what the commentary is. Have you been looking into Grab? I think this is another one that I've heard Amit talk about, but not too much otherwise. It's like a South Korean Uber, right?
Not South Korean. I think it's Singapore, and it's Southeast Asian. It's Malaysia. I think it's in Thailand. If I believe Singapore.
That one's had a pretty good. It would tickers just Grab.
Yeah,
it's had a good move as well.
It's a good ticker name too. No, Amit told me, to look in the founder. Like, there's a long video that I have not had a lot of time, so I've not looked into that one closely. But I'm leery of more international exposure. I have enough through Nubank, and I see a question for Delo that we'll get to in a second. But yeah, Grab, it may be good, but like the thing you have to keep in mind, a lot of the reason why I think half of the people are chasing Grab, because somebody else is already in it that they know, and they're like, hey, might as well. And then some are looking at it just from a number standpoint. They're like, hey, compared to U.S. stocks, this trades much more cheaply. And that's true, but that's true for almost every single international stock. That's just the way things are.
Yeah.
There's the U.S. premium.
Yeah, there's another Southeast Asian company called C Limited, which was like the Mercado Libre of Southeast Asia. I just took a look at the ticker. And that's up pretty much, from $34 where it bottomed to 119, where it is the recent local top. Great. I think the whole sector is getting a boost.
Yeah, it's still way down from COVID.
Oh yeah, it was like $300 something at that point. But
yeah,
people are like, oh, the next Amazon. Okay. But they're a cool company. I have looked into the C Limited, and they're doing like video games and they're doing all kinds of different stuff. All right, D-Local. Speaking of international companies,
so that's more diversified. Right? Yeah, it's a payment processor, largely for emerging markets. There's some exceptions too. They are, I don't know if they're based in Brazil. They are in Brazil. They actually do payment processing. They have a partnership with Nubank as well. But they're in several other countries too. They're a little bit more diversified than Nubank, which is just primarily in Brazil. They've expanded to Mexico and Colombia, but it's in the early stages there. Delo does have the somewhat similar international risk. It's not being beaten down. It's actually been up since Alejandro mentioned it. So yeah, it seems like a good company, but I already own PayPal. I already own a lot of fintech, and I already have Latin American exposure. So it's one of those that, my brief look at it, and I looked at it, I don't know, probably not even an hour. I'm like, yeah, it's interesting. Compared to U.S. peers, it's undervalued, but you're going to find that with almost every international stock. Yeah. And I feel like I have enough exposure into the space. I'm more than happy with the global player that is PayPal that will hit new all-time highs in 5 years. So Delo might outperform it, but I'm happy with new all-time highs in 5 years.
I did happen to see the interview that you did with Alejandro. I think that was very well done. I'm like your number one fan, dude. Like,
thanks, man.
I watch all your videos. Other than that, I don't know anything about Delo other than the fact that Jesse also owns it and is bullish on it. Right now, I am dipping my toes into Latin America via New, and even that I think is a step for me. So I don't want to go full, international.
It does seem like a good company. Like, the one thing with Delo, with payment processors, payment processing is a commodity. Like, don't let somebody convince you otherwise. You have higher margins internationally than the United States, but I mean, Braintree, that's PayPal's payment processing service. It's great, but commodities really only work if you can either differentiate yourself and sell like other value-added services on top of that. PayPal does some of that. Adyen is differentiated in what they're able to do. Stripe has some differentiation as well. I don't know that Delo has that same kind of culture. There's a lot of competition in the space, even internationally, and so I have some concerns on that take rate and the profit margin continuing to stay up. I just don't know enough about it, to be honest. So I looked at it. I hope it works out for Alejandro. It probably will. The dude's a savvy investor, but got enough exposure, so I'm going to pass.
Yeah, exactly. Okay. Next question. We got a couple here. Thank you, Willy Wonka, for becoming a YouTube member. To Roy. Is that your first member?
He is my first. Yeah.
Congrats.
All right, Willy.
That's huge.
Appreciate you, man.
That's huge. I love that. Okay. If SoFi drops to 15 in the near term, would you buy shares or write cash secured puts? I think this really depends on what your position is on SoFi. Like, I'm already massively exposed to SoFi relative to my whole portfolio. At the same time, what I will tell you right now, since I didn't do the option video, let me just open up my little spreadsheet here and scroll down. So I do have cash secured puts on SoFi expiring this Friday for $15.50. And if that, I have 30 of those. So if that were the case, I would be the proud new owner of 3,000 new SoFi shares at $15.50. So that's how I'm playing it. I have a very real world example. I am buying cash secured puts, partially because I think SoFi is going to, Fed's going to cut tomorrow. I think the commentary is going to be fairly neutral. SoFi is going to keep rallying up. I mean, it opened at like 17 this morning. I don't think that 15.50 is going to get hit. If it does, then I'm happy to own those shares, especially because I sold shares at 16.50. So I'm essentially buying back those shares $1 cheaper and getting paid a premium to do that. But again, if you don't own a position in SoFi, then it really depends. I think if you are willing to wait, then do it through cash secured puts. I think that's just a good overall strategy because you get paid to wait and you're not just rushing in. If you're like, oh my God, this thing's going to the moon, I need to own it right now, absolutely, then just buy the shares. I don't know.
Yeah, for myself, I own a lot of SoFi and I've not really taken profits other than just some expiring calls in January. Or actually really just rolling those out is what I did. So oh no, that's never a good thing. Donald, Mayday. But if I did not,
so I've like almost like my success rate on cash secured puts, and this is more a sign of the market than a sign of me being savvy, is like 90 to 95% of like I don't get hit. Now, my success rate on covered calls is closer to like 50-50. So I'm not doing covered calls nearly as much. So I think, Donald, you're going to be fine, man.
Yeah, it's a bull market. So covered calls will tend to get hit. You have to be very careful with those. If you don't want them to get hit, if you're happy to, it's fine. If I had not enough SoFi, and I don't think 15 is a terrible price to buy at, then I would write cash secured puts pretty aggressively, and I wouldn't mind that at all, either the premium or the stock. If I had no SoFi, and I'm like, man, I need some SoFi, I wouldn't do cash secured puts at all. I would just buy. I've missed out on opportunities before writing cash secured puts, making a little bit of money and missing out on a much larger gain. In a bull market, other than, there are pullbacks, but oftentimes those cash secured puts you can be more aggressive with, and even then they don't get filled.
Okay. Moving on to our next question. And guys, keep throwing rapid fire questions if you want us to answer them. So our next question is, let me throw it up. Robinhood market cap in 2030 will be blank. Roy, this is all yours. Plug your show.
2030. Let's see. That's a little ways away. It is cyclical, though. I could probably see. Let's see. Where is it at? Let me just.
I love the very serious, like thought out answer too.
Yeah. I mean, I could see north of 200 billion, which is massive growth. It's not a 10x, but I mean, I think over the next 5 years, there's going to be for sure a crypto winner. We talked about a Robinhood Weekly the other day. Like, they are doing a ridiculous volume on crypto. that's only going to accelerate under the SEC as the bull market continues for crypto for most of this year. I think at the end of the year, we may not see that. We'll see new tokens. We're seeing international expansion. There's staking opportunities. They're doing all of it. And that's just one of 9 segments that have at least $100 million annual run rate for Robinhood right now. So they're firing on all levers. It's a great company. They have a great strategy to execute on just a small portion of that TAM. Not everything's going to be a success, but man, almost everything that they're doing is just extremely well executed and well done. So yeah, it would not shock me if it's a 200 billion market cap.
What are they now?
36.
Wow. So you basically think what is that, like an 8x, something like that, 7x?
7 point something in 6 years.
I hope it happens for you. That's again, like it really also depends on the macro, right? Like if we have another recession in 2026, 2027, like that 7x is going to get screwed, because then you only have 4 years to do what you planned 7 years for, So you're also betting on the market to go up in general, because Robinhood makes a lot of their money on trading activity.
Yes. And I think we'll have probably 2 crypto winters in that time. So another full bull market, and then part of one as we're in 2030. I think equities, barring something unforeseen, and there's lots of things I don't see. This really feels to me like 1924 that we're heading into, not 1925, specifically just because a lot of tariff stuff that's happening, a lot of implementation of new technology, mechanization and industrialization back then, which had outsized gains across the entire United States, and a lot of expansion initiatives as well. Geopolitics even matched up, even the debt stuff matched up very well, and the cost cutting in the government, all of that basically to form this new roaring 20s. And I'm not the first person that says that. I really do think that it may be another 5, 6, 7 years before we see another bear market. Will we see this kind of a bull market every time? No. But I think that there's at least going to be 1 year, maybe a couple of years between now and then, where we'll have like the everything up 2021 type event. People are calling like it the market being bubbly right now. They haven't seen anything yet.
You want to, just while I pull up the other question, plug your show real quick?
Yeah, we started a Robinhood Weekly. It's on Monday nights. I always forget the time because it's in Eastern time, so I got to do the math. But with Amit and Tanner, and yeah, it's a great show. We have a lot of fun. It's a very exciting and interesting company, so we're able to cover that weekly just because there's so much news. Probably a little bit less news over the next couple of weeks, but I mean, that's for every company. But there's a lot to talk about, guys. There honestly is. Versus like PayPal. I love PayPal. It's a great company. Probably every other week would be enough. I do a PayPal monthly, but yeah, Robinhood is a unicorn. It absolutely is. It's a jewel of fintech, and the market's waking up to it.
Speaking of, what do you guys think about Shopify?
No, the question is, do you guys think about Shopify? The answer is yes. Moving on.
Oh, the answer is no for me. I don't think about Shopify at all. Except when June asks me what are my favorite Canadian stocks to invest in my homeland, Shopify. It is the best performing Canadian stock of all time. It just beat out RBC, which is Royal Bank of Canada, by market cap at some point over the past 4 years. I don't remember exactly when they crossed. And, I think Shopify is going to be around for a very long time. I think they're one of the few Canadian companies that are innovating. Actually, I changed my answer in real time. If I can invest in private companies, then one that I would invest in would be Wealthsimple. I think that company is like amazing. It's the Robinhood of Canada. They have the exact same approach, the exact same like user experience. Everything feels so smooth and seamless. Like Robinhood of Canada, in the sense that they're a product-driven company in that investing space that's massively disrupting these legacy players. Because Roy, you might not know this, in Canada, it's not like in the US where you have a whole bunch of like a perfect competition, to use an economics term, whereby the consumer wins. In Canada, it's more towards a monopoly where you have 3 big banks that really determine all the prices. And as a result, we still have broker fees on like a lot, like options for sure, but there's still in many cases, brokerages that still charge you fees to buy and sell stocks in 2024, believe it or not. The reason why is the same reason why a phone bill costs 120 bucks, and the same reason why, you know, you can only get two major cable providers, or you can only get an Air Canada flight that they're jacking up the prices, and now they're removing carry-on luggage because they can, because they're essentially government subsidized at this point, even though they lose money like nobody's business. It's that we don't have competition. And so when you have a company like Wealthsimple enter the space, and they are powerful enough to not get bought out immediately, because this is what happens. Companies start up and then they just get bought out by one of the bigger players. The founders take a payday and everybody else suffers. Wealthsimple hasn't done that. They've gone through the Shopify route of being product driven and of providing a superior user experience. And I think that it's going to be a huge, huge, huge winner when they eventually go public. And I hope they do on the New York Stock Exchange or the NASDAQ. Definitely not the TSX, because that's where dreams go to die.
Yeah, I misspoke. I am in a second international company, that's Upsellera, that's over in BC and Canada. So that would be mine. Shopify, I've thought about investing in it a couple of times. I think it's a very good company. But again, I already have a lot of fintech exposure, so probably not going to.
Wealthsimple does have crypto. So check again, because they do. And I think now they also allow you to withdraw it to your wallet, which they didn't have before. Do you think Nodo and SoFi considers a sailor like Bitcoin stacking arbitrage strategy? I think we covered this in our Bitcoin section, in our SoFi segment. Yeah. I think it's very, very unlikely.
Yeah, not going to happen.
Have you guys looked into Archer at all? The eVTOL sector is looking very promising to me. It seems like Tesla 10 years ago, except in the air. Right?
Yeah, it's one of those things that I actually have a relative that, I'll just say I've got a couple of sisters. One of my sisters invested in Joby, which is a similar product. There's Lilium in the space. There's Archer. There's a couple others as well. I don't really know enough, and I don't know what the demand actually is for those. They feel to me a lot like FUV Arcimoto, those little weird EVs that were like not even bicycles. It was a weird niche product that I just didn't see a lot of demand for. So I never got into that. These eVTOLs, like I think there's more demand for that, but I just don't know.
Yeah, I don't like, again, for me to be bullish on Archer, I would need to first be bullish on the eVTOL space. And I think that space is going to get regulation to death. Like, I think Amazon finally got approved for like drones dropping off your packages. And there's so many like edge cases, even for that, where like there's things that you don't even think about until they actually happen. So I do think it's early for the eVTOL space. And then within that space itself, if you're like, no, Tavis, you're wrong. I've researched it. I'm bullish on the space. Then you have to bet that Archer is the winner in that space. And that's all a question of execution risk. Can they execute more than the competitors, and to what degree?
I don't know anything about the individual company at all. Just other than like, I think I've seen a video or two. Cole there said he got into the defense sector. Like, that's interesting. That could be a good opportunity for him, but I just don't know.
Yes. Regulated to death, even with a new administration. Dude, it's something that is like still theoretical at this point. Like, I don't know that anybody is doing, and again, Cole, maybe this is my ignorance, man. Like, but I don't know that somebody's actually doing eVTOL at scale, maybe in China. Like, if you're talking about large numbers where it's a paradigm shift that people are now going to use flying cars, like, that's a sexy idea. I've read about it in sci-fi novels as well. I would love to see it happen in reality, but reality is much slower than what happens in fiction, right? Like, I thought we would have him by now, but we don't. I just got done ranting about Canada, how we still have fucking broker fees, and you're talking to me about flying cars. Like, dude, like, there's a huge gap in between those two things.
Maybe Archer is behind all those drones, and they're actually just eVTOLs out there in New Jersey. So Not
Mhm.
really.
Yeah, like defense sector, drones, whatnot, like absolutely. I see that. But if you're talking about people's lives where they have to hop into this thing and then you have to determine, okay, like, okay, let me just run through some things that immediately jump into my mind. What altitude is it going to fly at? Does it interfere with, you know, other like airplanes? Does it interfere with helicopters? Does it interfere with buildings? Are we running a risk of like, hey, what about people can do drunk driving and then crash into a building and then you have like you know, a massive disproportionately larger situation because you have fucking pieces of metal flying out of the sky because a drunk driver decided to, like all of these things, even with drones. What about packages falling on people's head and breaking their neck? Is Amazon liable for that? Is the drone company liable for that? Yeah, don't forget about birds. Like, my point about regulation is not that, okay, we have an inefficient government, which we do, and it's going to take Doge probably years to start unraveling that spool, but it's also that there's a lot of edge cases that you haven't even thought about before. And that this is why I say this is experimental, because I think about all of these things and I'm like, dude, it's going to take so long for, for this thing to actually become reality, because you're not talking about like a Waymo situation where it's only locked to San Francisco. You're talking about something where theoretically, for it to reach scale, it would need to be across the whole US. And then if it's across the whole US, then you're talking about like international borders, all this crap. Like, what if I go to Canada and it's not allowed? Do I have to like start landing and then driving on the road? Like, it's a whole mess, man. I don't know. That's a stupid rant, probably, but some of those points are probably valid.
Mm-hmm. Yeah, June says, don't forget about birds. STFU FFS says birds aren't real. And he's correct. They're not. So we don't have to worry about birds.
They're all spy planes. We know that.
Drones.
Okay, what other question? This show completely went off the rails.
I saw Michael Talbot. I'm sorry if I mispronounced that. APLD turned on power today. Can it make a splash in the AI sector? That goes back to what I was sharing earlier from Sherwood Media. Just there's as many data centers, and this is a data center, I think, play. I just looked it up real quick just to be sure. There are as many being built right now as currently exist in the United States, and that's great because it shows demand, but it's also not great because I may be mistaken here, but I see data centers as a commodity. And in the commodity, you need scale, or you need differentiation, or you need to be able to sell other value-added services on top of that. I don't know enough about that company to know if they have any of those. I don't think that they have scale. The hyperscalers have that. But as far as the other two, maybe you just have to see. But there's a lot of competition in that space. There's a lot of demand too. I would just be a little bit careful with it.
Mm-hmm. When you become part of the States, some of those dude, somebody sponsor me to come to the US and I will fix the eVTOL problem. Let me put it that way.
Well, let's do John's last here.
Thoughts on nuclear stocks? Yeah, we're going off the rails.
I was actually looking at some IPO names
Mhm.
from the last year or so, and yeah, nuclear energy. There's a couple of tickers on there that just did really well. I've swung trade a couple of them too, and they've been done really well. And they went from basically being undervalued and just dead in the water, with some early people calling on nuclear stocks, nuclear energy, and uranium. Derek Hall is one of those. I have to interview him sometime. He's also on PayPal, by the way. But no, there's a almost unsatiable energy demand. Part of it's Bitcoin mining, which it's a small thing. The data centers, like they're massive. Cloud computing's massive. AI's massive. EVs are massive. EVTOLs, we'll see how they do. But I mean, that's a massive energy drain as well. There's just an insatiable thirst for energy right now. And that's going to benefit, of course, nuclear stocks, but be careful of what you're getting to. My understanding is I think there's only one reactor left in the United States that can be retrofitted and operated very quickly. The rest either have to be rebuilt or completely refurbished. There's a lot of regulation with that. So it could be that these run for a while longer and then just kind of stall out just as they're waiting for those projects. Some also end up selling products that are tangential, that are not like the reactor or power source itself, but are products that are marketed towards those. They'll probably do well too. But I mean, I'm in phase. Like solar, like energy is very big. And I think there's going to be a lot of energy winners. But nuclear, I'm very glad to see it doing well and being thought of again. The next question is Europe going to come around on nuclear? I don't know.
No.
Europe seems, no offense to anyone who's in Europe, but as far as governments, seems so backwards to technology.
Yes.
It just like burning coal and shutting down nuclear plants. It just, in a place where you don't have tornadoes, you don't have hurricanes, you don't have earthquakes, you don't have tsunamis, is like there's almost no risk with nuclear these days, and in that kind of environment. And they're like, no, let's burn coal.
Yeah,
I don't know.
I do think that on nuclear, I think super quickly, the U.S. will emerge as a stronger winner because of Trump and of Doge removing some of the bottlenecks. I do think also that the perception around nuclear is shifting towards more prominent people talking about it as a a perfectly valid, sustainable energy source. And the everyday person, the moment you say nuclear, they think of Fukushima and they think of Chernobyl, and like that is still the perception. I think that that is slowly changing, and as a result of of the U.S. being more of a leader in that perception shift, I think they're going to win out against Europe, which is more stifled by regulation. Thoughts on AMD? Rewind to the very, very beginning of this live stream. We started off the live stream with AMD. Did you guys talk about Rocket Lab? We mentioned it briefly. For Rocket Lab, go check out Rocket Lab Weekly or Matt Money's channel. That's probably the best that I can give you. Roy, do you own Rocket Lab?
No.
Okay. Thoughts on 2025 rate cuts? I think between 3 to 5 rate cuts. If it's 5, we're off to the races. If it's 3, that's base. If it's less than 3, brace.
Yeah, we'll find out tomorrow.
Yes. I just want to let's do 4 more minutes, Roy, until we hit 11, and then we call it.
All right.
What the fuck is BTLG? It's an acronym for bootleg because on mobile the title gets cut, and because you can only have a certain amount of characters. So deal with it.
The fireman had a question up there. With the Trump administration coming soon, what is a hidden gem you see? Something like AI or quantum compute coming in 2025? Quantum seems like it is happening. Google with that massive headline from a little bit over a week ago. The stock has been running as a result. I'm not in Google. I've went from bearish early in the beginning of the year to slightly positive, not enough to actually own the name. It still has a lot of issues, but yeah, that quantum computing, it seems like that they made a breakthrough there. Potentially, we'll have to see how that works out. I still think that's a ways away, but the market is forward looking. I still think that the AI play is not fully done. Energy is something that we just talked about that is going to get a lot of traction too this year. Cybersecurity, like don't sleep on cybersecurity. I'm not in. I almost went in Rubrik, almost went in a Century One. Thought about CrowdStrike, didn't go. Like I own none of these, and I'm like a little bit mad at myself just because they just seem like an obvious play, and it's kind of like Amazon too, honestly. Just
yeah, I don't think I have anything to add in addition to that. I think at this point of the cycle, hidden gem is harder to find, and hidden gem in AI is basically an oxymoron at this point. You will have winners in AI that will continue to win, but if you're looking for like a little $3 billion company that's going to increase 100% a year, but is actually down, like tell me about it because I'd love to invest.
Yeah. June's comment, any hot thoughts on robotics? I mean, yeah, that's one of the best. Let me see if I can pull this up real quick. I think the best performing IPO over the year is actually in robotics. PO. Yeah, this would be it right
Grab,
here.
we talked about Grab in the rapid fire round, so you'd have to rewind and take a look at that. Robotics. Yeah.
So yeah, this is the top performing IPO over this last year. And that's Serve Robotics, SERV, something that I'd never heard of until today. This is in the food service industry, if I remember correctly. There were another nuclear, by the way, right up there as well. Rubrik is cybersecurity. That's one that I almost went into. It's still on the watch list. Maybe I'll go into it at some point. But I like a concentrated portfolio. But no, there's a lot of robotics names out there, and that LLMs make a lot of things possible, including robotics. Without LLMs, without maybe quantum computing, without data centers, without AI, we'd be a lot further off in robotics. So I think that all the pieces are there. It's just waiting for somebody to really assemble a product that's compelling. We're going to see that with rich people, and like you'll see it with like real shots of this, like with Kim Kardashians of the world that have like a group of robots. Like there's that shot I know that she's doing. I don't know if she's getting paid by Tesla to do this or not with Optimus spots. I don't know if you saw that.
Yeah, like weirdly sexual photo shoot with a robot.
But that's largely just marketing. That's showing off to your rich friends, whatever. You have something cool and new. But I do think in the next 2 to 3 years,
considering what that woman gets paid for every single social media post, like that is a blessing that she's like, hey, Cybertruck's cool, Optimus is cool, let me do a photo shoot.
Yes.
All right.
Yeah, it's awesome. She is Tesla's Taylor Swift, if Taylor Swift is supporting SoFi. But no, I really think that within the next 2 to 3 years, we're going to start seeing robots really ramp up in the commercial space. Amazon is going to be one of those leaders. They already do a lot with robotics and automation. Food service. I mean, there's a lot of like wage pressure and stuff, and there's a lot of unknown questions. Like that's one of the questions that I asked actually a lot of people in the investor day in the NASDAQ a couple of weeks ago, was what they thought as far as robotics, AI, automation, replacing jobs, and if UBI is something that's coming. And so pretty much everybody sees those trends, and robot is really like the next big thing. So, that's my robotics play is Tesla, but there are other players out there.
Yeah. Just wrapping up here and we're over. Likely, just super quick, Roy. Likelihood for a 50 bips cut? No.
Not happening.
Okay. Any hot thoughts? You answered that. Oh yeah, just thoughts on cybersecurity ETF.
Yes, very safe. ETFs are great. If you're bullish on a sector, do it.
Yeah, so I want to pick this up. I think if you're bullish on a sector but don't know what to buy, then an ETF is probably a good route for you. Applies for like genomics or healthcare, whatever space you like don't know as much about and you don't want to know, then you just pick an ETF.
Yeah, I'll pick, like, if there's a space I'm really bullish on and I have like 2 names, I'll do those 2 names. Otherwise, ETF makes sense.
There was one thing I wanted to talk about, but we don't have time now. Okay. I wanted to play that video with Massa and Trump. You saw that, right? I sent that to you.
What video?
With we'll
yes, with Trump.
Yeah. Let me
let's end on that one, and then like just no thoughts, just like there you have it. And,
all right. Everybody like and subscribe, and especially to Roy's channel as he's growing it. 2-hour plus live stream. And we will end on this. Charlie Kirk, art of the deal. After SoftBank CEO Masayoshi Son announced a $100 billion investment in the US, President Trump asks him on the spot if he'll double it. So let's play this clip. It's 1 minute and 23 seconds, and we will log off right after that clip with no commentary. So I will say goodbye right now.
Go, and we were discussing, and President Trump said, Masa, double down is not enough. Maybe, go for more, right?
That's all right. I'm going to ask him right now. Would you make it $200 billion? He said, he can actually, believe it or not, he can actually afford to do that. Would you do that?
Well, my promise is 100, but, he's now asking to do more. I think, with your leadership, my partnership with you, with your support, I will try to make it happen.
That's good.
All right.
200. He'll make it happen. 200 billion investment.
He is a great negotiator.
He's a brilliant guy and did an unbelievable job, and people of Japan and all over the world are very proud of him. They have tremendous respect for him. So what he does, what he just did, and I would be surprised if it didn't go to 2. When you say you'll try, I know you'll do it.
I will really try, and I need your support, though.
You'll have my support.
All right.
We have our country's support.
Oh, fantastic.
Thank you, Mr.
Fantastic.
Thank you, everybody. See you next time.